And first of all, thank you to the brave ones that have stayed so long, but you might just make money out of this session, so it might be worthwhile. So thank you very much. If you guys could just put the slides on, that would be super. Thank you. Very quickly, so I'm actually a game entrepreneur that recently, 3 years ago, became also a venture capitalist. So I really understand both sides. So I've had to raise money, but I've also invested money as a venture capitalist, as an angel investor as well. And more recently, I've also had to sell my business, sell my studio. So I know I've basically gone through a sell process of a studio. And I've been doing a lot of M&A as well with the new studio that acquired me. We're actually acquiring now other studios. So that's giving me a bit of a I'd say, good look at basically how things work. So hopefully some of this will be helpful for you guys. So I have 2 jobs right now. One of my jobs is with a company called Stillfront, where I'm basically the Group Chief Operating Officer. And that's basically an alliance of 12 semi-autonomous game studios. It's a listed company. The market cap's about $600 million, so it's fairly large. There's about 600 people that work in the company. And recent acquisitions that we've made are Good Game Studios, that some of you might know, Imperial Online, and Kixeye. I'm also a venture partner at a company called Atomico, which is a leading European venture capital firm in Europe. And some investors you might know is Rovio, which is Angry Birds, Supercell, Bossa Studios, Tea Time, and OBB more recently. And I've also done many kind of angel investments, which are too long to list here. So how do we think about game investing when basically this is from like the venture point of view? And I really think that games are Europe's hidden gem, because when in the firm that I work in at Atomico, we look at all technology companies, right? And most VCs, they don't really invest in games, and I think that's a huge mistake. Why do we think it's Europe's hidden gems? Well, first of all, the market is getting bigger and bigger and bigger. It's a market that's worth in excess of $100 billion. It's growing all the times. And basically, you have companies that really have achieved huge scale in Europe. I'm thinking about Supercell, I'm thinking about King, and actually there's some estimates that the market is already close to $140 billion, depending on who you listen to. So huge market, obviously driven mostly by mobile, which is about 46.1 billion, and has basically taken over. It's become the largest segment of the market. So this is some interesting data here. The platforms continue to develop. And there's a really interesting phenomenon that's happening. Obviously, messaging is becoming bigger and bigger, and you're seeing that, for example, in countries like China, Messenger is a huge distribution platform for games. That hasn't happened in Europe yet, in spite of Facebook's best efforts, but still, it's something to look for. It's a very liquid market, so investors, they enjoy investing money, but they like even more making money. They hope to get a return from that investment. And actually, games is a very liquid market. What do we mean by a liquid market? Is this actually exits. And there's an ability to exit at all kinds of levels, from $20 million up to $10 billion. $10 billion, that's a huge exit. Supercell was acquired by Tencent by $10 billion. That's not a unicorn, that's a decacorn. That's really big. King was a $5 billion exit. SpaceApe was quite a fairly large exit, and then you've got smaller exits like my own company, Republic Labs, which was I cannot say how much it was, but it was between 10 and 100, basically. Stillfront, also my own company, we're making 2 to 3 acquisitions a year of 10. Yeah. That's good. Can you hear me? Thank you. Of 10 to $280 million. So if you've got a super studio and you're looking for someone to buy you, we might just be the people to do that. And the latest acquisition that we made, Kixeye, that was 2 weeks ago, that was basically a $90 million deal. So there's some big deals happening right now from European players as well as acquirers. And also there's very fast returns. There's a really big consumer adoption. And what we're seeing is actually game companies actually are quicker to reach a point where they're interesting for an acquisition or they're interesting for eventually an IPO, sorry, than other tech companies. So that's another really interesting point. Another good thing is game companies are extremely cash efficient when they're well run. So it's not uncommon to see basically game companies basically generate cash very quickly and even become profitable very quickly. So when you're an investor, that's really good because most tech investors, most tech companies, they will take many, many years to basically become profitable, which means they will have to go through many, many rounds. And so if you invest early in that kind of in a company, you will get diluted. Also, as a founder, you will get diluted a lot. Some game companies, they will do maybe a seed investment, a Series A, a Series B, and quite often, that's all they will need, and then they will basically be in a position to either IPO or exit. More rarely, some do a Series C. So that's a pretty good thing. And then the speed of revenue growth is just incredible when things go well. So this is the Supercell graph, and you can see just, that in 2012, they were already making, from $0 to $100 million. 2013, they were making just under $900 million. 2014, they were making $1.7 billion in revenue. I mean, that's a pretty phenomenal growth. So we were very happy to invest in Supercell, obviously. And then the other really interesting thing that's happening with games, a lot of investors will tell you, oh, I don't invest in games because it's a hit-driven business, and then it's kind of like this and all that. Well, that's true in part, but not so true anymore. Some of those games have a really, really long revenue longevity. You have games that will generate revenues for several years, or even in certain cases decades, and kind of very high revenues level. So that's interesting. And then the other thing is that once you have success, when a game company starts getting its mojo, it can really replicate that success. We've seen Supercell find success with Clash of Clans, and then repeat that success with Clash Royale, and then to a lesser extent, but still very impressive, with Brawl Stars. So you can really see these new players emerge and be very successful. And then there's deep European talent. There's great games talent in Europe. We've been doing games for a long time. You have companies like Ubisoft, Jagex, Gameloft, King, Supercell. People who've worked and Rovio, people who've worked in these companies and then set up their own companies. They have the right experience to do something really special, and that's always something that you're looking for as an investor. And then it's a unicorn factory. I mean, we don't realize, and when I go to tech conferences, everybody talks about the Spotifys and all these other European successes, and nobody actually remembers that there's several European unicorns. So you've got King, you've got Mojang, which is Minecraft, you've got Outfit 7, you have Supercell, you have Unity, you have lots of other kind of companies that have become quite big and originated in Europe. So if you're looking for basically funding from $5 to $15 million, Atomico is a good place to go if you're for raising games. There's a video online where Ilka, who's the founder of Supercell, will explain to you how Atomico can help you. And obviously, feel free to talk to me. If on the other hand you're more like looking for an exit, basically if you wanna sell your company, then you can also talk to me. That's more with Stillfront. But here we're doing things a little different in Stillfront. One of the things that I find that usually M&A doesn't work in the games industry, and very often it doesn't work because they're trying to. There's a lot of integration that happens, and I don't think that integration works in creative industries very well. I think one of the things that is very important is that studios need to maintain their independence. You need to have a studio-led culture. You need to have as many decisions as possible that stay at the level of the studio and as close to basically the game teams as possible. And so that's one of the things that Stillfront has understood and is doing. So there's no integration. The whole culture is based around collaboration, entrepreneurship. And the other thing that we do is we only acquire very experienced game teams that have existing games that have revenues, that are profitable, that have been going for a long time. So that's really good. If you combine that kind of entrepreneurship with the financial muscle of being a financial company, public company, which gives you access to different types of funding. For example, after the Kixeye acquisition, we actually raised through a share placement and then through a bond placement. In the space of 1 week, we raised $105 million. So basically, there is a lot of money out there for games if you've got the right structure and if you know how to basically get it. Okay, so what's so powerful about gaming? The audience reach is incredible. What really should get an investor turned up is just the reach is just crazy. There's over 2.2 billion active gamers right now. About 1 billion are spending money when they're playing. So that's really something that you should put forward and should remind people. I spoke about the scalability. I mean, it's incredible, especially if you're doing. Distribution in games has become something incredible. You can start a game here from Barcelona, and basically, other than maybe China, that's a bit more complicated. You can basically, sell your game everywhere in the world. And in most cases, you actually don't need publishers to do that. So that's, again, there's not many industries where you can do that. That's really, really powerful. And you can do that across multiple platforms. The rollout speed is really kind of impressive. PUBG, they were here before. They were speaking about all the different locations that they have. But quite honestly, in many cases, that's not necessary. And Supercell, I think, has an office in China that they opened after one in Japan, but that was actually after Clash Royale was already a global success. So they basically mostly built all of that from Helsinki, Finland. So that's pretty impressive, and that's extremely attractive if you're an investor. The other really interesting thing that we're seeing is the engagement potential. We're seeing that playing patterns are changing, and games are becoming more and more engaging, and the number of hours that people spend on games is just increasing more and more. I think in one of the other talks, we heard that Netflix, when they think about their competitor, they don't actually think about HBO or the upcoming Disney. They think that their competitor for people's entertainment time is actually games. So I think that's quite an interesting way to look at it. Then another point is monetization. There's multiple ways to make money right now with games, which makes it really interesting. Obviously, we've got the classical way, which is sell your game for $50 up front or $60, the kind of premium thing. But then we know that you can extend that lifetime with DLCs. Paradox is extremely good at doing that, and then you kind of have this ongoing revenue. Obviously, there's free-to-play that's taken mobile by storm. Free-to-play is now something like 94-95% of mobile revenue. So if you're doing a premium game for mobile, I think you should think about that twice because the revenue is in free-to-play. And then also free-to-play was starting to get a bad rap, but we've seen that there's new monetization loops with games like Fortnite that are not pay-to-win. That are actually extremely powerful. So there will be new things invented about how to monetize our games. And advertising is actually now generating some serious revenues as well, just because of the huge reach. And you have companies like Voodoo, for example, that are making massive revenues with advertising. Another thing is the margins for video games are really, really powerful. Very small teams can support really big audiences. Again, if you take the example of Supercell, 244 people supported a company that was doing $2.1 billion revenues. I mean, if you calculate how much revenue per team member that is, that's pretty impressive. There's companies with thousands and thousands or tens of thousands of employees that do not reach that kind of revenue. So it's really impressive what you can do there. And this is why I'm always, when I look at teams, I'm always kind of thinking about how efficient they are, how many people do they have, and what are they able to do that with that. Another really great thing about games is it's extremely, it's very highly data-driven. You know, you've got metrics for everything. You can really measure everything. Investors love that because that helps them, you know, make better decisions and avoids them, you know, making many mistakes. You know, if you're thinking about, you know, about mobile games, for example, you're able to, you know, do soft launches. You're able to get KPIs. You're able to have, you know, numbers like what the retention of your game is, how it's monetizing. You can correct that. You can share that with the investor. You can do you can really do a lot of things, and you can really correct a lot of things, and you can not just. And I think in the earlier talk, you know, we were talking about the community and all that. And yes, you should always listen to what your community is telling you because that's going to help you improve your game. But if you can actually watch what they're doing and seeing that through the metrics, that's even better. So we love that as investors. Another thing that is interesting is that, and this you're going to find this bizarre, but actually. We like the fact that there's a lot of competition. We think that's really interesting. That's a sign of a market that is working well. There's about 3,000 games that get basically launched weekly just on Google Play and Apple. And that means that for us it's kind of good because the really best companies and the best games emerge, and they're kind of, it's clear and easier to see who those are. So what are the top investment criteria? What do we really look for when we're basically kind of investing? So metrics really rule. And the question I get asked very often is, Alexis, you know, what kind of metrics does my game have to have, especially if it's a free-to-play game or a mobile game, in order for you to invest? And the honest answer to that is it depends. It really kind of depends on whether it's a casual game, it's a mid-core game, it's a hardcore game. It also evolves over the years. The metrics have had a tendency to basically decline in the past years. So if somebody tells you that, oh, if your game doesn't have 50% day one retention, there is no way you will get funded, it will never work, that's total bullshit. That's not true. Because if you've got 30% day one retention, but then your day 60 retention is super high and you're monetizing super well, and you're able to acquire customers at, you know, at $1, and you're making $5 from your customers, you've got an incredible business. It doesn't matter what your day one retention is. So be really careful with metrics and really think hard about how it works. But basically, if you're interested in examples of at least a few benchmarks, and I'll be happy to share those with you. And there's some examples of, you know, how we divide the games into different genres. But the real key to basically games is the team. It's really, you know, how strong the team is. So we're always, as an investor, we're always looking for teams that are passionate about games and not tourists. Don't take the word badly in terms of tourists, but there's many tourists in the game space. You know, there's many people, you know, whose dream is to do a game, and they know they raise some money and all that, or they get some money from friends and family, and they do a game and all that. But it's, as I said before, it's a super competitive environment. If you don't really know what you're doing, you don't really have a chance. It's going to be very hard for you to break through. So one of the things that we look at is we look at teams that have shipped games together before, maybe in a different company, and then they leave that company and they set up a new company, and then they do things. But very important for us to see if you've got, you know, if you haven't shipped a game before, or if you haven't shipped a game together before, it's going to be hard for you to get the top investors interested in you. Because, I mean, all of you guys have been involved in building games, and I've been involved in building games. You know, we know that, you know, you need to have failed together, made the mistakes together, so you get to a point where there's almost a telepathic connection between the team, and where basically you can work really well. So that's very important. And then we need to know that, you know, you're strong, you know, in art, in dev, in QA, that you know how to handle a community, that you know how to do the design correctly, that you're strong in analytics. You really need to be the full package if you really want to raise money from the right investors. And whenever we see lots of mistakes and scars, but a real hunger to win, that's also a great thing that we look at. Obviously, technical talent is super important as well. But not just when I'm saying technical, not just from the programming point of view, but also like game design is really changing really quickly. There's many things that maybe were true a few years ago that are not so true anymore, and that need to evolve. And so basically, an understanding of the latest game design principles is super important. And being great at understanding metrics, being able to apply metrics to game design decisions is something that we look at. And another thing is fast design and QA cycles. If you're not shipping, or if you're not in a situation where you basically doing weekly sprints or maybe bi-weekly sprints, if you have a slower rhythm than that, I would be worried. So that's another thing that we would look at. And then this is games, right? So creativity is super important. If you're just a Me Too company, if you're saying, hey, I know I'm going to do Clash Royale in space, or I'm going to do PUBG with angels and demons, the likelihood that you're going to do a great game is kind of low, and the likelihood that you'll be able to do better than those guys is kind of low. So this is where I think the magic kind of happens. Is very often I see teams that are either really good at the metric side, and then understanding kind of what makes games work, and and they can basically, if I'm talking to them, I feels like I'm reading Deconstructor of Fun, because they're kind of deconstructing all the games and all that, but they would be incapable of coming up with an original idea, something new, something fresh that can really inspire people to play their game and kind of really be interesting. And sometimes you see this crazy creative creative minds that have all these amazing game jams and do all these crazy great games, but they have no idea, or they're not very strong at the metric side. They don't have the discipline to then make that work. So what is amazing, and when there's really something special, and that is a company that I really want to invest in, is when you have a combination of both things. Because I think that's the two legs that you need to stand on right now if you want to find success in games. So in conclusion, the fact that investors, so when I say when investors, they like the fact that it's a competitive market, it's the hard market and all that, is because, let's be completely honest, the winners, the people who really do well in games, they capture the majority of the revenue, the majority of the profits. Because you've got this kind of self-fulfilling prophecy that you've got a successful game that you can build on, therefore you can spend more in marketing, therefore you have a more powerful IP and all that. And what you're doing is you're creating barriers to entry, which is exactly what investors like, because when you're creating barriers to entry, you're getting kind of more value. And when you've got that, then you're able to attract the best talent, because the best people want to work for the best studios who have the biggest reach, they have the games that have millions of people that play for them. So that's another thing that, again, is interesting because it creates value into the company. That sucks for the other ones, because what happens is that the top guys are really kind of sucking the oxygen out of the smaller guys, which basically are in a situation where it's very hard to compete and they stay small. So if you're not in a situation where you can basically get onto the rocket ship, if you cannot demonstrate to an investor, hey, I have an amazing team, we have this background, we've been able to do these games, and we've got this game that's going to be a rocket ship, and here are the KPIs to show it and to prove it. Quite honestly, it's going to be super hard for you to raise money. That's all I have for you, because I wanted to maybe make this more about Q&A, because some of you probably are either raising money, or have just raised money, or are thinking about doing it, or you want to know if your studio is interesting for M&A, you're setting it up for M&A. So I thought that maybe we do this more about questions as well. So please, if you have any question, think about it. Obviously, I can also be reached quite easily If you want to, this is my email. So if it's a question more about M&A and how to kind of make your studio part of something bigger, you can email me at alexis@stillfront.com. If your question is more about investment and how you can raise money for your studio, please feel free to email me at alexis@atomico.com. That's it.
Thank you. Thank you, Alexis. So this is a great opportunity. I'm sure many of you have questions. I don't know if you dare to ask Alexis now or not, but it's a great opportunity. Why don't you take it?
There's a question there. And really, ask me any question. I've had to raise funds many times, so I know how painful it is sometimes.
So for us beginners, we should self-publish our first crappy games so we get enough experience to try out afterwards, trying to sell our games or our business to, well, investors? Or should we try at the first moment to go to investors?
Yeah. So short answer, you're not selling to investors, obviously, because investors basically what they're doing is they're taking minority stakes in your company to go with you for the ride and basically get an outcome afterwards. My recommendation, if you're beginning, if you're basically a native team, I think the most common mistake I see is these teams getting together and doing these huge projects that last 2 years or 3 years, and then I think that's death. I think what you need to learn as a team is to shipping product. And then, so my really strong recommendation is do the smallest, most basic game with do the smallest, most basic team you can get away with. Like we're talking a few months. And if you self-publish it, you will learn tons. But there are, to be honest, although I'm not a big fan of publishers, actually for very small games, from very small teams, there are a lot of options out there to do interesting things and then basically learn from that. And it will be so much easier for you to raise money if you've shipped something. Yeah.
Okay, thank you.
Thanks. The question there?
Hello.
Hey.
Sorry. When you do the acquisitions, do you have any do you do total acquisitions? But by what you said, no, because you said you wanted to go along with the ride with the team.
Yeah.
So what kind of acquisition or percentages or structure are you guys used to?
Yeah. So everyone's different, obviously. There's lots of buyers out there, not just Stillfront. I want to make it very clear. Excellent other companies acquiring. Stillfront, what we do is actually a little bit different. So we do try to actually acquire 100% of the company, or at least a majority of the company, because we're a public company. If we have less than 51%, we cannot consolidate the numbers towards the public. So it's usually a majority stake or a full stake. But what we do is we usually, and it's usually about a 50-50. So we will do 50% of the acquisition will be in cash, usually. And 50% of the acquisition will be in shares. Not always, sometimes it's 100% cash, but we try to make it in shares as well, so that the team that we basically were acquiring, because when we're acquiring a studio, we're not acquiring just the games. We're really we want the team to join our family and be part of the family and be basically shareholders in the whole thing. So that's the approach that we prefer, but sometimes we do it fully in cash. Thanks. And who's there? There's a question there. Oh, I know. How are you doing? And there's a question there at the back as well. So there's a few people I know. Excellent.
Thank you. Hi.
How are you doing?
Good, thank you. So thank you for the talk. I was going to ask, so when looking for investment, it sometimes feels like there's this catch-22 situation where the investor is looking for the studio to have the whole package ready. So they want the metrics, they want the full team in place. But it feels like once you have all those things in place, you don't really need an investor anymore. Because you're only looking for money for user acquisition, which you can get much more cheaply through debt or any other way. So when do you think is the optimal time to say, take the jump and go from maybe besides some very early seed investment to actually take a decent round?
So, and I know you know this, but for the benefit of the other ones, there's really different types of investors for different stages, right? You've got, usually you do the friends and family stage, then you will do the seed stage where maybe you get some a bit more, slightly more adventurous angels, and all these people will potentially invest pre-product or invest once you've got initial KPIs or in soft launch and all that. I think the ideal moment for you, and then if you look at venture VCs, like Atomico, but if you're thinking about game VCs, and by the way, if you're looking for really early stage game VCs, don't hesitate to email you. I'll be very happy to make introductions if I think that what you sent me looks good. But people like London Venture Partners, for example, and there's other ones as well. They're really in it. They're not in there to fund your project. That's not what they're about. Venture capitalists, they invest to accelerate your growth and to basically help you achieve scale and avoid some mistakes. That's what they invest in. They don't invest in, I'm going to give you money, you're going to work on the project for 3 years, and then we'll talk again. That's not what they're into for. They're in for, you've got a product, that product is showing clear signs that you can scale, and basically and then that's when they come in to basically help you accelerate your growth. So the right time to speak with those VCs, and that really depends on how strong you are, and then they're going to look at basically proof points that demonstrate to them that you either have a product that's ready to accelerate, to really accelerate, or you basically have something that's quite close. So my recommendation is the best time to approach VCs is when you have a product that's in soft launch, that you have strong KPIs around that product, and that you can show a clear direction about how those KPIs are going to improve. And then if you're able to create enough interest around that, then that's great. That being said, there is an exception. The exception is if you're that incredibly talented team that comes from a major success before, then the VCs will jump in earlier. Then you've got an unfair advantage, but you worked for it. You got to that position before. But if you don't have that, you need the KPIs. Yeah. There was a question there at the back. Yeah. By the way, there's a lot of money out there. It is possible. Don't. I know it's the end of the day. The right games, the right teams will find money. There is money out there.
Hey, so wanted to ask you, coming a bit back from the first question. I mean, given you're not a big fan of publishers, can you list or give some examples of what other options are there for beginners?
Yeah. Oh, for beginners. Oh. I know you've got to begin, you've got to start, right? But it's hard. It's hard when you're starting. I mean, the options out there, these are not necessarily, I don't think these are open for beginners, to be clear. But right now, there is a platform war brewing up and starting. Epic is trying to make some space. You've got the Steam store, the Epic store. Apple is launching Apple Arcade. A lot of people have noticed what's happening. Google is doing Google Stadia and all that. So again, not for complete beginners, but if you've got something that's really powerful, a really interesting IP and all that, these are there are ways you can get funded potentially for your game by talking with these people. But of course, you need to be. It won't work if you're a beginner. If you're really starting from scratch, again, I think it's the same recommendation as before. Friends and family money, ship something as fast as possible, as fast as you can get away with, and if you can avoid publishers, it's not that hard to do Facebook UA. You don't need that much of a budget to kind of see if your game is going to work. So my recommendation is, even if you're going to work with the publishers, test that, try that, just to understand the dynamic. And then, actually, there's some decent publishers for small games. I mean, there are examples of people who've done quite well, by putting their games in Voodoo and Ketchup and that sort of stuff. That's for a very specific type of game and in mobile. For PC, it's a bit different, and there's lots of other ways. I mean, I was speaking today, this afternoon, with a studio that did a very successful crowdfunding with. I mean, that still works. So there's many different ways to do it. But of course, again, if you're a beginner, crowdfunding is difficult, because why would people give you money? So it's find your niche. I think find your niche, find something that people really want, and maybe that will work. But at the end of the day, the best way to raise money is to ship product. And quite honestly, it's not that expensive today to do a game. You don't need that big of a team, and you don't need that much time. So honestly, if you've got nothing, if you're not able to pull something together and have something, maybe you've got no business doing games. Sorry.
Okay, thanks.
Yeah. Any other questions? I don't want to end on you've got no business doing games. There's a question there. Yeah, Mike is coming. Thanks.
Hello. Okay, so coming from Argentina,
Yeah.
we have a bleak history in our country for some of our companies, that when they get acquired or they get not such a huge investment, but some investments, it's like they don't know how to handle that money. So I was curious about your experiences about having invested or acquired these other teams. Have you noticed any changes in leadership or human elements in the companies? Because usually the companies are maybe, I don't know, like 15, 16, 20 people.
Yeah.
And suddenly there's a ton more, and it's very different running a company of 5 people or 20 to 100 or even 500.
Very different.
I was curious about what's your take, or what have you learned, or what have you seen about this element?
Yeah, I think it's a great question. And actually, where I talk to you about it from an investor's perspective, I'm going to talk to you from an entrepreneur perspective, because what you described almost happened to us. So when we started Republic Labs in 2007, it was with friends and families and fool's money. Then we did a small angel round. And then in 2009, we did at the time what we call a Series A round, which was about 2.5 million euros, which at the time was a lot of money for Series A. Now it's peanuts. And before we did that round, we were a team of about 12 people. The initial core team that did the first game, eRepublic.com, that was 6 people. We shipped the game in 6 months, by the way. And it just worked. And after we raised money, I made so many mistakes, man. We grew the team to 70 people. I thought I knew how to manage 70 people and how to hire correctly 70 people. That was not correct. Made many wrong hires. I think we probably blew most of the money that we raised because of that. And it was tough. And the honest truth is we weren't ready to raise. I did too good a sales job on the investors and fooled them into thinking that we were ready. And sometimes you have to fake it till you make it. Sometimes it works, sometimes it doesn't work and really bites you back in the ass, which is what happened to us. I mean, to give you an idea, our first game, eRepublic.com, cost us probably, I don't remember if it's 150,000 or 200,000 in total to develop, launch, and all that. And it made something like about $20 million in revenues. Okay, I mean, that's a pretty good success. Then our kind of big game after we raised money, it took us 3.5 years to do because we were thinking too much about what we should do, and then with this massive project, and we tried to do XCOM free-to-play on mobile, which was the dream game I would like to do with real-time whatever. It cost us $4.5 or $4 million to make, and it made $40,000 revenues. So then we survived because I had to do one of the most painful things I have had to do, which is I had to basically fire most of the team, and we went back to 28 people from 70. And it was super painful, but what's really bizarre is the moment we became 28 people instead of 70 people, everything started working again. The team just worked. So my recommendation there is when you raise money, the temptation to hire is going to be very strong. Resist it. Resist it. Take the time. Don't change everything. Make sure that you keep that team really, really core and really, really hungry. I think that would be my recommendation. We ended up, having a very, very good, success story afterwards. But those 4 years, they were not fun, man. They were much worse than the first year where we were doing the game and all that. It was not fun.
Thank you.
Welcome. Any other questions? One last question, maybe one there, and then I'd like to let you guys go off early. So one question there, and I'll maybe take one more question, and then I realize I'm the one thing standing between you and a nice cold beer. So.
Hello, I would like to ask you about the bad things because we have talked a lot about the good things.
You think so?
Well, in the presentation. So, as a developer or a small indie team, what are the consequences if, for example, you invest in a project and it doesn't sell like it was supposed to? What are the consequences for the developers and the team?
Okay. So first of all, just to kind of put a high note, and also because I actually think it is, I think this is the best moment ever to be building games. I mean, small teams of 2-3 people can do massive games that are played by millions of people, and it still happens every year, and we see it all the time. So that's kind of what I want to say. And the only answer I can give you, the only real correct answer I can give to what you just asked, do it again. Learn, understand what went wrong, do a proper postmortem, do it again. And the people who manage to have overnight. I remember like some people, when I shared on Facebook that we sold the Republic Labs and all that, really like, yeah, it's. So a lot of the comments were really positive, and some people were like, yeah, of course, things are easy, like overnight success. And my answer was like, yeah, overnight success, 10 years in the making. It was 10 years. 10 years to get to a point where really, the company was interesting enough to be acquired. So just do it again. So it's like, you fall from the horse, you get back on the saddle.
Hey.
Jefferson.
I'm gonna add some geography to this, because you have had a bunch of experience with different countries, and you're talking specifically about Europe.
Yep.
How do you think, and I'm sure a lot of people here, we're having a conversation last night where like the Danes were like, it's so hard to raise money here. Germany is so much better. And then the Germans are like, it's so hard to raise money here. In Scandinavia, so much better. So everybody thinks like it's better somewhere else. And I'm sure if you ask people here, they're going to say Spain is terrible.
Yeah.
But like, what's your perspective for Spain specifically, since we're here? Like how easy it is, what kind of the best way to go find that money?
I think Spain needs to be more like the Finns. How do you say? The Finns? Finland. The people who live in Finland. Don't give up, the drinking beers and all that sort of stuff and all that. Let's continue doing that in the terraces and all that. But let's do it together. Let's try and meet up this is super, for example. What you're doing here, with Game Lab is amazing, but it's not enough. What you need to do, what the Finns are really good at, is they share everything. And you know that because you've worked there. They sit together and they say, these are my KPIs, this is how it works, look, I did this game design thing. And then when they share everything, not within the same company, but within different companies, they just help each other. They just say to each other, oh, you need an investor, this guy is investing right now, this guy is in town, or that sort of stuff happens. And this happens because they meet all the time. So if you're a studio in Barcelona and you're not meeting other studios in Barcelona on a monthly basis and sharing what you're doing and giving them advice and helping them out, honestly, not good. If you're a studio in Madrid and you're not doing that, honestly, not good. If you're a studio in Valencia, wherever you are, make sure that you kind of do that, because at the end of the day, this kind of community helping each other is the key to success. And that's how basically investors all of a sudden, if they go to Barcelona and they realize that instead of seeing just one company, they're going to see 6 or 7 companies, and they're going to be told, and these guys are doing something interesting and all that, they're going to come back. If they come and they only see one company and they're not that interested, they won't come back. So I think the key is collaboration. That's the difference. That's what really, really, really makes things work. Yeah. Good. I think we're all ready for beer.
Okay.
Perfect. Thank you, everybody. Thanks.
Thank you.